By all indications, this year, 2020, is going to be an exciting year for the cryptoverse, for what's foreseeable. Market shows good signs of improvement, and development within the blockchain industry is also at an all-time high. The big events for this year is firstly the decentralized finance that's been developing. Secondly, the central bank issued central bank currencies, which is a massive move for the crypto world. And last but not least is the halvings for this year. The big halvings is going to affect miners. It's also going to affect the price of Bitcoin and the price of other cryptocurrencies. And I'll explain to you how in this video. The halving event is a massive event for the crypto community. It means we see the cryptocurrency mining rewards actually drop by half, so drop by 50%. What this means for Bitcoin and all the forks, say Bitcoin Cash and Bitcoin SVs, we're going to see the coins, the rewards going to decrease from 12.5 coins to 6.25 coins this year. And this was originally designed by the Bitcoin founder to actually stop oversupply. So if you just look at basic supply and demand economics, obviously less supply and more demand equals a higher price. And that's exactly what they're going for here. It's really designed to stop flooding the market, or stop potential flooding of the market, and Bitcoin becoming too easily accessible, and obviously thus losing its value. And just before we get into it, if you're unaware of what a fork is, in layman's terms, it's just another cryptocurrency that's been based on the original that brings supposed upgrades to the cryptocurrency's usage. As illustrated perfectly in this picture, as you can see, the fork crypto will simply start a new fork with its new upgrades whilst leaving the original cryptocurrency untouched and obviously still fully functional. The first of the forks is the controversial Bitcoin fork, Bitcoin SV, owned by self-proclaimed Bitcoin creator Craig Wright himself, which is also halving this month, April 2020, and we'll see its supply decrease from 12.5 tokens to 6.25 tokens, which means the value of solving a Bitcoin SV block is now worth approximately $1,122 US. Bitcoin Cash, another hard fork and spin-off of the original Bitcoin, will see its supply become half by May 2020. Like Bitcoin, the supply will decrease from 12.5 to 6.25 tokens at block 630,000. So that makes the reward for solving one block worth approximately $1,325 US. Bitcoin, the undisputed leader of the cryptocurrency world and the highest cryptocurrency market cap. Bitcoin will also see its mining reward decrease from 12.5 to 6.25 Bitcoins. It is the highly anticipated halving event of the year, with it being Bitcoin's third ever halving since the inception back over 10 years ago, with major implications for both miners and, more importantly, Bitcoin speculators and holders. However, the reward for solving a block is still a staggering $41,488 US. Some other important altcoins that have halvings this year also include Zcoin. The original Zcoin halving will take place in September 2020, and we'll see its supply halved. It's going to go from 25 Zcoins per block to 12.5 per block. The Zcash halving will take place in October 2020. The number of ZECs mined by miners is going to reduce from 12.5 to 6.25, and it will occur at block 1,046,400. And last but not least of the altcoins, we have Horizon. Horizon is a fork of Z Classic, and its halving is going to take place at block 840,000 in approximately November this year. The rewards are going to decrease from 12.5 to 6.25, which is all too familiar for today's video. Obviously, crypto is something that's not very easily predictable, so obviously don't just take my word for it. But if history is anything to go by, then we will see a price increase over the next 6 to 12 months. Whether it's massive, whether it's just consistent with, current trends, who knows? I guess only time will tell. But I appreciate you watching the video. Make sure to drop a like, hit subscribe, share the video around, share the joy, and we'll see you next time. Thank you very much.